Welcome to Breakout Investors. We are excited to be speaking with the management of Iridex, ticker IRIX, specifically the company's CEO, Patrick Mercer. Joining me on today's call and leading Q&A is Breakout investor Aaron Warwick. This call is being recorded on December 18th, 2025, and will be distributed via the Breakout Investor YouTube channel and our Substack network. Supporting materials and post-call analysis will be available on the Breakout Investors Collaboration app, available on the app stores, and available at breakoutinvestors.com. The application and much of the research content is free. We also invite you to join our WhatsApp community, which is linked to in our YouTube profile that we will be posting this video to after. So let's get the call started with me handing it over to Patrick for a brief presentation with Q&A to follow, led by Aaron. Patrick?
Great, thank you very much. My name is Patrick Mercer. I'm the Chief Executive Officer here of Iridex. Joining me today is the Chief Financial Officer, Romeo Dijon. I've been with Iridex for 7 years, and I became the Chief Executive Officer a year ago, October. Romeo, you want to give a quick introduction before we begin?
Sure. Yeah, I started with Iridex as a corporate controller back in 2008, worked there, leaving as a CFO back in March of 2020. Soon retired, but then Patrick called me last December, say, hey, look, we need to turn the ship around, need someone to help me turn it around. So I said, well, hey, so long as you're going to listen to me and we can turn the ship around, I'll be right there. And I've been here the last 9 months, and we're doing the things that we said we were going to do.
Great. Thanks for that, Romeo. As I want to remind everybody, today I'll be providing forward-looking statements. So I just want to remind everyone of that. I like to start with our vision and our mission at Iridex. So I'll start with the vision. Our vision is to transform laser-based eye care to preserve sight and improve quality of life for patients suffering from ophthalmic conditions globally. Our mission: deliver innovative, clinically proven, non-invasive laser technologies that safely and effectively treat glaucoma and retinal disorders. Now let's discuss our business. Iridex has a long-standing reputation in ophthalmic lasers, supported by our strong clinical credibility and our loyal global customer base. Our portfolio includes retina and glaucoma products, giving us a solid reach across two major markets. Our retina business is primarily a capital equipment business, while glaucoma is recurring revenue business. In 2024, our revenue was $49 million, $28 million from retina with a 49% direct margin, and $13 million from glaucoma at a 71% direct margin. 2025, which we'll talk about later, is much improved. Let's look at our retina portfolio. I'll take a snapshot of that. Our retina portfolio is one of the broadest in the industry. It includes our Pascal pattern scanning system, our legacy lasers, and our IQ lasers with micropulse technology. These solutions cover both surgical and medical retina laser needs. And when you add in our delivery devices and our disposable probes, retina probes, we have a full suite of retina products to be used in the space. Now let's talk about the glaucoma product portfolio a little bit. On the glaucoma side, our Cyclo G6 platform and our full range of micropulse and continuous wave probes, they're really the key tools for specialists treating all stages of glaucoma disease. Micropulse TLT in particular is quickly becoming a go-to choice because it's safe, predictable, and repeatable. As we know, glaucoma is on the rise around the world, and our probes offer a great mix of clinical benefits and economic value for practices. Let's talk about our global commercial footprint. We now have a strong global presence with direct sales in the US and wide distribution around the world, reaching over 40 countries. This allows us to scale efficiently while supporting growth in both, the capital equipment systems and disposable probes. Let's touch on the retina product overview. Our retina install base is aging, especially with our Pascal and IQ units. Nearly half of these systems are over 5 years old, with many approaching end of service. This creates a significant replacement opportunity, which is particularly timely as we introduce some of our new products. Pascal laser treatment options. We have really 3 great treatment options, and these options are tissue sparing. The first 2 are really sub-threshold treatments for retina. They are micropulse, endpoint management, and PSLT. All these options are safe, efficient, and effective. When you really look at the fact that we have these 3 options available, and the fact that Pascal is very quick and it has a good, it's really fast at providing its output. It's really easy to see why this is really becoming our flagship product. Let's talk about the retina opportunity, because retina is still 2/3 of our business at Iridex. The global retina market is big and growing. It's really fueled by the rise in diabetic eye disease and our aging populations. With over 8 million retina laser procedures each year and more than 55 million patients at risk of vision-threatening diabetic conditions, the demand is high and continues to go up. Our micropulse technology puts us in a strong position to meet that demand. We have a clinical study we mentioned here. It's called the DAME study that's ongoing. And really what it does is it looks to extend visual acuity in the diabetic macular edema patient population. It addresses the economic burden of repeat pharmaceutical injections. And when using micropulse in conjunction with injections, you would reduce the amount of injections a patient needs, which is really what the study aims to prove, and really a benefit for the patient. Most of you know this, but that know our company, but this comparison illustrates the clinical advantage of micropulse over traditional laser therapy, which leaves scarring that can impact vision. Micropulse minimizes that thermal damage and really saves the tissue. It heats up the tissue and allows it to cool in between treatments. Let's talk a little bit about the endoprobes. I have illustrations here of the different types of endoprobes we provide. They are about 22% of our retina revenue, and it's reoccurring. Our endoprobe line continues to be a strong contributor, offering precise surgical tools. It can integrate with vitrectomy procedures. And these are single-use devices which really enhance surgeon control and generate reoccurring revenue with each case. Let's look at our glaucoma product overview. Wow, the U.S. glaucoma market is substantial, and there's a lot of room for growth for us here. I mean, Iridex is just scratching the surface. There are over 2.1 million moderate patients, and that's the real opportunity. We are seeing momentum here. We've seen a lot of momentum as of late. There continues to be growing interest in non-incisional treatments, and we are seeing more comprehensive start to use micropulse TLT. Internationally, the opportunity is even larger, with millions of treatable eyes and a large global surgeon base. We estimate around 700 million probe opportunity in the rest of the world markets alone. As we strengthen the distribution performance and really enhance the training, we expect to steadily increase that utilization. Let's look at the landscape of what type of procedures are going on here. I show the different procedures here, but what you really got to understand here, and here's the real opportunity, and the takeaway here is the versatility of our laser technology allows us to treat following all of these procedures or in conjunction with, and that's really the aim, right? You do a mixed procedure, you can do a micropulse with it. You do a trab or tube. Any of these can be done with, or micropulse can be done with, standalone, or following any of these procedures. That's an important takeaway here. Glaucoma management. Back in the 90s, You got diagnosed when you were 60. You treated till you were 75. Not the case anymore. Glaucoma is being diagnosed much earlier, and people are living longer. This means the disease can span, 30 to 40 years. Well, Iridex can offer solutions that can treat these patients across the entire life cycle of the disease. And that's what's really, really important here. And we can do that with our MP3 probe or our G probe. This slide's a little busy, but it's equally important. Kind of gives a little history of Iridex. It illustrates how 810 nanometer transscleral photocoagulation has advanced over time. We started with the classic CW, continuous wave. Iridex was the inventor of the G probe. And then we evolved that procedure into what we call a slow coagulation, or what we call a slow burn, and then incorporating that into the micropulse technology with refined delivery devices. The point here is that our G6 probes offer a solution for clinicians, regardless of their disease states, whether they have their eye pigmentation or other factors. Now let's talk a little bit about the clinical data. This recent prospective data is compelling. It shows that when you do 5 15-second sweeps, or even 4 15-second sweeps, we achieved great results. For example, greater than 50% reduction in IOP at 12 months. That's huge, with an excellent safety profile. What's important here is that with efficacy improves predictability with dose adjustments, and while maintaining extremely low complication rates. This really reinforces micropulse TLT's position as one of the safest non-incisional glaucoma therapies available. Let's talk a little bit more about outcomes. If you look 5 years out, we had Ronald de Crom for the Netherlands. He looked at his patients 5 years out in 112 pre and post cataract eyes treated with micropulse. You saw a significant reduction out 5 years, and a reduction in the amount of drops, 32%. This slide really tells us is that when we look at patients long-term, we continue to see sustained IOP reduction even after 5 years. Let's look at another study on repeatability. Looking at 76 eyes of moderate to advanced glaucoma that underwent retreatment, all patient groups demonstrated a 25 to 35% reduction in IOP. The point here is this is not a one and done procedure. Clinical data shows that micropulse and continuous wave treatments can be repeated, providing meaningful and sustained IOP reduction over time. This allows ongoing treatment as needed to manage glaucoma. Quick snapshot of the CPT code. We have a stable and long-standing CPT code. It works for both CW and micropulse. We have a physician's fee of $440, ASC of $979, and hospital at $2,229. But what's really important here is this. We look at the ROI for placing a G6 system in an ASC or a hospital. And what the economics really show is that you just need to do 3 cases per month in order to pay for that laser system. And the economics are really good in the hospital setting. MedScout. MedScout is a software platform that integrates into our Salesforce. It's an awesome system. I mean, the takeaway from this slide is MedScout gives granular visibility into where clinicians are performing our procedures and exactly when they are doing them. When you look at this level of insight, it helps us better understand procedure adoption and utilization. And that's what's really important. We have a reduced sales team, and it's really important that they're focused on going after the right customer base in order to increase utilization. Let's look at a financial overview. We started the presentation talking about where we ended 2024. But what have we really done? Where have we made the strides? In Q4 last year, I took over as CEO at the beginning of Q4, and we took some decisive actions to reduce our operating expense and cash burn. We really reviewed all the personnel and every line item and spending. The goal was to right-size our company for the revenue. Before that, we weren't right-sized. We continue to focus on reducing our OpEx and COGS to improve margins and demonstrate that we're good stewards of capital. The reality is we did everything we said we'd do the last few quarters, and there's no reason we don't believe that we won't do it in 2026. We continue to take actions by relocating some of our manufacturing processes and some of our front-end office things to continue to improve OpEx and COGS. If you look at our highlights here, we've reduced OpEx by 2.3 million. We've increased our revenue with a much smaller team. We reduced our operating losses. We are going to be positive adjusted EBITDA for the year. We plan to be cash flow positive in Q4 and in 2026. So we see, we are very confident and very, I'm really proud of the team we have here, but going forward, we're excited about the opportunity here at Iridex. And with that is our presentation. I'll close, but first I'll say I appreciate everyone's time to join us this close to the holidays, and I'll wish you a Merry Christmas. And with that, I'll take any questions you might have, me and Romeo, for us.
Yeah, thanks a lot, Patrick. You hear me okay?
Yep.
Yes.
Okay, good. Yeah, so the thing I want to start with, I guess maybe we could talk a little bit about cash burn and gross margins, and actually hopefully we'll talk about cash flow in the future. But I think that the biggest takeaway I heard, the biggest negative thing I heard from the last time you reported was there was cash burn in the quarter. And even though you did say that you're confident about being cash flow positive in Q4 and good guidance or outlook for 2026, I think there was some concern over that. Could you maybe address why there was that
Okay,
cash
first,
burn? Yeah.
yeah, I'll talk, and then Romeo, I'll turn it over to you. Our
Okay.
cash burn in Q3, we were below plan for our cash burn in Q3. So everything that we had predicted for Q3, I just want to be clear, we were under our planned cash burn. We never said we would be cash flow positive in Q3. And with that, I'll let Romeo finish up from there. But
Yeah, but for the quarter, during the quarter, it was planned. I mean, we obviously, when I first came on board, we had a lot of accounts payable vendors that were being delayed. So we, with a cash infusion we had from the Novel investment, we've had, we want to make sure we were good with all the vendors. So we had to meet forecasts and materials. So we took the Q3 to pay most of those people off, and we're pretty much all current with all our vendors, and that was a major decrease in our cash balance in Q3.
Okay. So
I mean, we reduced our operating expenses, like Patrick said, 25-30% from the prior year. So our
Yeah.
cash burn related to that it's much lower.
So you sounded highly confident, on the call, the last earnings call, and then in this presentation about being cash flow positive for Q4. How does that happen? Do you see a rebound in gross margins? What else is expected that will get you there?
For Q4, it's basically like the higher revenues and higher margins, because in Q3, like we disclosed, we given that we're going to be going into contract manufacturing, and usually costs that are just left out is like most of the inventory are not taken by the contract manufacturers and end up being like excess and obsolete. So we took that Q3, that opportunity to just write down almost $900,000 worth of excess and obsolete inventory. So that really destroyed the margins, so to speak. It went from like
Okay.
39-40% down to 32 to 34. But going forward, we see that all, going back to normal. So with a higher revenue and that normal margin rate, that's how we're going to get back to cash flow positive, as well as, we've managing working capital. Obviously the AR is coming in better.
Good.
yeah, and I'll just add to that, Aaron, that Q4 is one of our largest quarters for probe sales, and probe margins in the US are in the 80%. So
Okay.
that's one reason why we're confident is we're going to have a large, a great quarter on MP3 probes. Another is, look, our Retina is also up. We're going to have a good quarter in Pascal as well. So we continue to see our Retina grow as well as our Pascal. So Q4 is one of our largest quarters, so we're very confident going and finishing up Q4.
Good.
Can I ask
So do
another,
you-
jump in with another margin question, please?
Yeah,
Sure.
yeah,
Yeah.
go.
Sure.
I mean, I don't know if you guys can share this, but Romeo, do you guys have like a gross margin target in mind based on the cost cutting that you have in the pipeline? Because it sounds like you still have costs cutting that you've done that still haven't fully flowed
Yeah,
through.
and we mentioned that in the call, Patrick, like, I'm always looking to cut cost. And one of the
Yeah.
things that we said was, we're not cutting bodies, but we're transferring where those bodies are and getting a better return on the salary differentials. I mean,
Mhm.
right now I've gone to a couple of places I've traveled to where we're going to shift these people to. I mean, we're not going to cut heads. We're just going to replace them with lower paid positions. I mean, not lower
Yeah.
caliber wise, but lower salary because of where they're at.
Yeah. You commented that you've seen a pretty strong rebound in margins during fourth quarter. You seem pretty optimistic about that. I'm just wondering, do you see that sort of momentum, continuing into the first quarter, or is it just not clear yet?
Well, no,
I-
unless something a normal anomaly happens, we see it just margins being at the normal rate. But as you know, anytime you do contract manufacturing transition, there's obviously costs that we're going to be incurring that we wouldn't have incurred otherwise, like i.e. duplication of people that's training the contract manufacturers. So we've got that in the planning and the budget. So we still see, based on the mix and forecast we're going to do the revenue, it still should hold at the normal margin rate that we were used to seeing, which was the high 30s, low 40s.
Got it. Got it. All right.
Good, good.
And there's no reason, I mean, going into Q1 with the momentum we're leaving Q4 with on the probes and on the glaucoma side of the business, as we continue to push the dose escalation study, the benefit of the LCD and a lot of the other momentum we're seeing on the glaucoma side, we expect that growth to continue. We're just scratching the surface, as I showed you the market opportunity, particularly around the moderate patients. If you look at our total MPTLT usage and where our customers are, we're only doing about 35% of our total probe volume in the moderate patient area. We have a huge opportunity there to move that further down the continuum of care, and that's really where our teams are focused. If you look at refractory glaucoma and late-stage glaucoma, our G probe is doing quite well in comparison. So the real opportunity is to target those moderate patients. And as we continue to do our training and focusing on physician adoption and clinician adoption, that's really where the opportunity is. So there's no reason to think that we're not going to see growth there going forward.
All right. All right.
And
So-
to add to your comment, Matt, as you know, we're going to be leaving our facilities in late 2026, but from that we're gonna incur savings of at least $270,000 to $300,000 per quarter because of the rate rental differential.
Yeah.
And
Yeah.
half of that is allocated to cost of goods sold based on just the allocation of spaces to operations.
Yeah.
Yeah, going forward, we're in really good shape. I mean, we haven't talked about it a lot on the calls, but as Romeo alluded to, I'm going into 2026. We are looking at relocating some of our manufacturing operations, which will reduce our cost. We're looking to get out of the building, as he alluded to in August. So all of those things, as well as some of the other front end pieces that we're moving around, is going to continue to reduce our operating expense and improve our cost of goods. So we're very confident going into 26.
You mentioned that you expect to be both cash flow and net income positive for next year.
Mhm.
Would it be inappropriate for us to assume that means that you will have more actual cash on your balance sheet by this time next year than the 5.6 that you reported
Yeah.
at the end of third quarter?
We expect to, yes.
All right.
Good. And what
Oh, no,
about,
no,
I mean,
getting
that's
back to,
encouraging.
getting back to the net income, that I think we mentioned operating income.
Okay,
Because
operating income.
we
Yeah,
do have non-cash
correct.
interest expense
Right.
we pay
Fair enough.
in the form of stock shares to Novell.
Fair enough. But the key thing is that you're targeting, if I'm hearing you correctly, is that you would expect to have more, if you, without any sort of swan type events, you would expect to
Right.
have more cash on your balance sheet if we have this conversation a year from now.
Yes. Yes,
Absolutely.
sir.
Absolutely.
That's good news. Thank you for that. Aaron, go ahead.
Yeah, I just want to ask it real quick about the revenue side of things, because we talked a lot about the cost cutting. I think your revenue growth is up a little over 5%. Is that sort of what we should be thinking of for next year? Should it be a little higher than that? I mean, you're talking about a lot of different opportunities, but I don't know, how quickly we should expect those to translate into revenue.
Yeah, we expect, without giving guidance for next year, we
Right.
expect growth to be similar to what we're seeing in Q4 going into next
Good.
year. I'll say it that way.
Perfect. Thank you.
Got it.
Matt, you
Can
want
I-
to talk about, maybe ask him the questions we had about like the Clinico and
Yeah,
everything?
about clinical Novell, I have a couple of questions there. I didn't fully understand who Novell was when when the investment was originally made. My understanding is Novell Inspiration is the financing vehicle used by Clinico's controlling family to make the investment in Iridex earlier this year. Is that correct?
That is correct. Yes.
Yes.
Got it. And I've also more recently learned, that Clinico was an Iridex. If I'm not mistaken, Iridex was a distributor in Asia for Iridex for like 10 to 20 years before
Yes.
you signed your current distribution agreement with Topcon.
Yes.
Yes,
correct.
there's
mean,
still
can you just-
there's still a
can you just-
distributor.
Yeah, could you please maybe explain how that prior experience, that very many years of experience as a distributor, why and how that motivated, influenced them to, make the investment?
So what influenced them to make the investment is Will Moore was working with them. He's an ex-CEO of Iridex.
Yes.
So he's the one that convinced them to make the investment based on, he saw confidence. He had confidence in where we were going last year and what the company was doing. And so he convinced them to make the investment and got them to, they're very familiar with the company, as you mentioned, having been a distributor of ours. They're still a sub-distributor. I mean, we go through Topcon, but Topcon uses Clinico as a distributor. So that's really the relationship. He really worked with them to convince them to do the transaction.
Do you see Clinico, having any sort of an impact, near term on your Asian distribution? I mean, that's one of the lagging markets over the last year to date. I'm just wondering if they're giving you any sort of, helping on the offensive front there in terms of maybe gaining some more traction in that market.
They're helping us they're helping us on the regulatory front to help spearhead approvals in
Mhm.
different markets. And they're also helping us on the marketing front, quite frankly. They've been responsible for pushing Topcon to, quite frankly, do more than they have been doing. So they've been involved on that side.
And how's Topcon's reaction to that been? Are they good playing in the same sandbox together? I mean, you said they have a pre-existing relationship.
They are they have a great good, I'll say great good pre-existing relationship, but also Topcon's still getting their piece of the pie, right? They're a pass through to
Yeah.
Clinico, so they're not unhappy with that. So
Yeah.
the relationship's working.
Just a couple of final questions on Clinico, and thank you for the clarification.
Yep.
It looks like Nick Shen, who's Clinico's chief operating officer, who just joined your board, is, and as part of the Novell financing, is based in Shanghai. And I'm just wondering, I mean, I recall Iridex a few years back, Micropost actually getting regulatory approval in China, but that market had been pretty dormant. I'm just wondering if Clinico is potentially opening any doors for you in mainland China.
Absolutely, as I mentioned before, that's that's where we're really getting the help from them on marketing. And, regulatory approvals in China take a long time, up to 2 years or more, depending on what the products are. So they're working, actually, we have regular scheduled meetings with Clinico to help spearhead some of those regulations. So that's really where the help's coming in.
Am I
Yep.
mistaken? I seem to recall that they're coming across some clinical studies done by Chinese doctors. So there seems to be familiarity with the technology within the medical community there.
That's correct. Yes.
All right.
There's a big market there that we really need to go after. Yes.
Go ahead, Aaron.
Excuse me. I wanted to transition to MedScout that you mentioned, I think, first time on the Q2 call.
Yeah.
Can you talk a little bit more, about the details about what they provide, how it's impacting your sales process here in the U.S.?
Yeah, Aaron, it's huge for our team, and it's working really well. When I talk to the VP of our U.S. sales, it's connected to Salesforce. The big thing for us there is they can go in and they can see exactly what clinicians doing what type of cases, whether they're doing competitive cases, whether they're doing our cases, how many G6s they have. And we reduced, as you know, if you followed the company, we reduced our sales team from 13 to 6 on glaucoma side in the US. So when you start talking about a reduction like that, it's really important that you use your sales team efficiently. And it has helped us dramatically. So one of the things has helped us do is we look at where our users are. And we have for example, our KOLs and some of our high-end users are 2%. And then we have some on the bottom who do 2 or 3 cases a month, but our KOLs may do 150 per quarter, and our KOLs may do 150 cases a quarter, for example. It allows us to go after that middle tier, which is really the guys who may have 1 or 2 G6s or who are doing between 18 and 55 cases a quarter, and really target them to drive utilization. You don't want to spend times on small markets where the patient population is small. Have your guys going out there, driving 2 hours to go meet a clinician that does, 2 or 3 cases a quarter. If he doesn't have the patient population. You want to target those guys who has a real opportunity. Maybe they have 3 or 4 G6s, but only using 2 of them, or new doctors come on board and really drive utilization there. And it really helps us do that by looking at it at a granular level. So that's really helping with targeting and driving the utilization.
Good.
Has that
Do you have
also been
anything-
helping you get more of your glaucoma consoles upgraded to carry the sweep software?
Yeah, that's a good point. Yeah, the sweep management software, absolutely. And for those that don't know, our sweep management software helps control the sweep speed, and sweep speed's very important. It's as if you're running your finger through a candle. If you go fast, you don't get the heat transferred. If you go at the right speed, you feel the candle's heat. Same thing with our device. We have sweep management software on our G6s that it does a dong. It makes noises as we track, so the clinician can go at the right rate of speed. We recommend 5, 15-second sweeps. And we found that's really, if you do it right, it works, and it works great, as I've showed you in the data. But, there's different methods with which clinicians like to do. Some of them like to do a slow burn with a G6. And it depends on how sick the eyes are, whether they're pigmented, or what the condition is. The point here is that whether it's using a micropulse or a G6, we have a solution, and you can retreat with our solution. And that's really, we are just, like I said, scratching the surface here. And quite frankly, these studies I mentioned have just come out, so we haven't felt the full momentum of them yet. And that's when you asked me, Aaron, about the opportunity going into next year.
Right.
We're just getting the info out. If you look, we just did a press release on the one last week. So there's an opportunity to flush this information out to our marketing and sales team. And that's where the opportunities are.
And can you just have you been seeing what have these efforts been delivering so far? Are you seeing a clear benefit from that targeting that you're doing? Are you seeing it already, flow through your organization? Is it obvious?
Yeah, we track we present quarterly on these numbers. So, and the sales VPs look at it, we're already seeing impact. I mean, I'm at AAO and I'm having doctors come to me and say, hey, we were a dormant account. We're ready to get back up and running. We see the benefit of the LCD and then all the clinical data. So we're seeing the impact already of these things happen already. So,
And just to be clear, you're using Medscape for both glaucoma and retina?
yes, we can. Yes, we're mainly using it for glaucoma, but we use it on retina too. Yeah.
Right. And are you doing anything similar in foreign markets? Or is it
We
just not
haven't
available
used,
yet?
it's not really available yet. We haven't done it before.
Go ahead, Aaron.
I
Sorry.
wanted to ask about probe sales. They've been down slightly year to date. The consoles for G6 glaucoma have been up, I think, just under 20%. But how should we view the different growth rates and the lower probe sales? Is it primarily due to the supply chain issues that you reported in Q2, or what's the reason there?
We did have supply chain issues
Yeah.
in Q2. We did. We've gotten those under control now. We're bringing up some other manufacturers. I think we're on target to finish up on the year. Romeo, you were gonna comment?
Yeah, but the decrease of that, from year to year comparative, Aaron, was basically attributable to a decrease in the OUS, mainly because of like distributor demands. OUS is definitely growing. So like Patrick said, it's grown what 8 to 12% since we had focused our salesmen more on, they're more efficient using the MedScout and focusing on those that buy more probes than the onesie twosies.
Yeah. Okay. So, you thinking of the outlook for those in 2026? Perhaps we'll see some growth in there, even though it's been kind of flat the last 3 or 4 years. But perhaps some growth there in the next year.
As far as units,
Absolutely.
yes, and we've raised prices over the U.S. on probes. It was accepted, fairly well, and we've going to increase it some more. It's not very elastic, so I think we can get there with that. And the OUS, we got pricing contracts, so it's not that easy to change pricing like it is here in the U.S., where we don't have contract pricing except for like the big GPOs.
Okay.
I mean, are you seeing clear evidence that probe sales at least should be up this coming year?
In
Just to
2026?
confirm? Yeah.
Yes, absolutely.
I think one of the numbers I'd asked, I'd asked if it would be appropriate for me to use, at least when we talked last Thursday, just for modeling purposes. You seem pretty comfortable with me using at least to start, a 5 to 10% type growth rate for next year. Is that kind of a reasonable
That would be
zip code to
reasonable.
be thinking about?
Yeah.
I'm comfortable with you using that. Yes.
Right.
You want to talk about the reimbursement, Matt?
Yeah, I will. Yeah, I'm curious if you could just talk, a more focused discussion on the impact you've seen year to date on the new reimbursement rules, the ones limiting, the stacking of mixed procedures, particularly in later stage glaucoma cases. You'd mentioned, I've heard a couple of times, I just want to make sure I'm hearing this correctly, that you're suggesting that you're seeing some increased relative demand for continuous wave treatments. I suspect that's from glaucoma specialists with treating more advanced cases. Is that
Yeah, and they're
correct?
learning. Yeah, they're treating more advanced cases, but they're also learning that they can use a slow burn, which is basically turning the power down and not doing a full continuous wave treatment for 3 seconds or 2 seconds. They can do 1.5 seconds and not get that pop and still place spots and still see great therapeutic results. So we're seeing clinicians do that, and it's really it varies obviously on doctor to doctor how they want to treat, but the point is they're finding different ways to use the probe to treat different eyes, depending on how sick those eyes are or what the parameters
And
are.
how much are you attributing that to the more favorable economics compared to the prior ability to stack MIGS procedures?
I think it's a huge contributor. You know, we are seeing, you asked about the reimbursement and how
Yeah,
that's
part of the same
that's another,
question.
yeah, that's another thing that we saw. You know, I heard at the AEO, and I've been hearing that, especially this year, as more doctors became aware, but continue to become aware of the procedures, that, you know, no longer are you allowed to stack MIGS procedures, which wasn't really, quite frankly, if give you efficacy. So you could use a micropulse in conjunction with a MIGS or standalone and get reimbursed. Same thing with other procedures and get reimbursed. And that's really where the opportunity is, Matt, that no longer are you able to get away with doing MIGS, but you can do micropulse because we have a different mechanism of action.
Yeah.
So
I'm curious if those MIGS limitations, does that benefit you in the earlier stage as well, or is that just, or the stacking of procedures just not done at that stage of the treatment spectrum?
it's done more at the moderate to advanced stage, right? So that's where it really benefits us. They don't do too
So
many.
it will benefit you among the moderate users as well.
Yeah, yes,
All
that's
right.
correct. Yeah. Post cataracts, you know, in conjunction with a cataract, either or.
Now is the market still adjusting to the new reimbursement rules? Does that normally take a long time to really work through the system?
Yeah, I mean, when it first got announced, I went to shows and there were still clinicians that weren't aware of it, which was a little frustrating, but that's been over a year and a half now. So it has taken time. I still think, I would say most know now, but there's still some that are confused or may not know, maybe 20%. I'd say 80% probably know now. Last year at this time, it was probably the other way around, quite frankly.
Aaron, you want to go ahead? I've got another one another topic.
Yeah, probably the last one for me. Wanted to talk about
Go
the Nobel convertibles. And so there's I think it's $10 million, the second tranche of their convertibles is a lot of people see it as a big overhang or potential overhang to your stock price. And just want to confirm that that would only be drawn to fund, you know, like something like a future acquisition or
Yep.
new product
Yes.
opportunity. That it's not going to be available for operating cash burn.
It's not meant to be, but even if we have, I mean, Patrick and I would really just want to draw down on that if we really had an acquisition, small tuck-in acquisition that can, you know, accretively increase our revenue. I mean, and it's synergistic, but the plan for next year is just to generate a profit with positive cash flow to fund our own, either through development of products ourselves or small tuck-in acquisitions. But we definitely want to stay away from those growth notes. It's available to us up to $10 million, of which I think a third of each anniversary year. But we
That's
haven't,
right.
you know,
That's correct. Yeah. And look, Aaron, if there's an accretive acquisition that makes sense for us, whether it be a small startup or a small public company or tuck in, as Romeo says, then we would tap into it and other funds as well if it made sense for the shareholders and for Iridex. Other than that, we don't plan on burning cash next year, so we would not take it to run the business.
Mm-hmm.
Can I ask
Matt,
a
maybe
question?
we should ask one more and probably let him go. I mean, I think we've got a lot.
Got it. Let me just ask. I'll ask one last question, just on the facility return on investment analysis that you presented in your canned presentation. I mean, the economics look very compelling. I'm just wondering, is that the first time you're out with that kind of data, you know, return on investment data to your customers? And I'm wondering what the reaction's been and what, if anything, has been the pushback.
So on the glaucoma side, so you're referring to the ROI that I did in the slide. It is the
Yes.
first time I shared it. I thought it was important because when I talk to other investors, sometimes they're not aware of it, or it's really,
But you're sharing this with your customers also, right? On the
yeah, our
salespeople.
sales team shares it with the customers and we get zero pushback. Generally speaking, that's why we were able to raise our prices going
Yeah,
into
right.
2026. It's one of the easier sells for us on the G6. For capital equipment, it's an easy sell because of that return of investment. And we're hearing that, and we're going to keep increasing our prices till we get pushback on the system sales. Because if you look at the hospital financials, it pays for itself very quickly. But even at the ASC level, doing 3 cases a month is nothing, right? Once you're a user that one of our, I'll call it 2/3 of our users are there. So
Last question. Is there any one aspect of your company that you feel investors are just completely missing right now?
I think Aaron alluded to it. I think there's this hangover of, like he said, he's wondering if the Novel investment's a hangover. Hopefully we address that today. I think that in the past we were in that strategic process, right? And we didn't execute that process. Even though we were close, we had 2 suitors, one of them got acquired, and well, both of them got acquired. We were pretty far down the aisle with one of them for part of our business. So that's, I think, hurt us because we're undervalued. I think everybody knows our stock's undervalued for what we're doing. So I think just understanding the glaucoma business as a whole and understanding where the real opportunity is for us going forward. It's a huge market in the US. So hopefully today that answered some of those questions.
Yeah, you did.
And let's not forget, we're still a retina company as well. We have 2/3 of our current revenue in retina, and our Pascal business, you're going to see year-over-year growth in retina. So we are continuing to improve all sides of our business, and I feel like the opportunity's there. But not to answer your question too long-winded, it was a good question. I think that those are the areas where investors may have doubts, but I'd be open to hear, what you guys think really from your side, because I sit on this side of the chair.
Aaron, go ahead.
No, I would agree with you. I think, yeah, what you talked about is total agreement.
Okay. Yeah, hopefully we answered those questions.
I don't want to get too excited, but to me, it looks like you actually are turning around the company. You're starting to demonstrate that. And I think the fact that you can say, it's reasonable for us to expect that you're going to have more cash on your balance sheet at the end of, the coming fiscal year, I think I frankly never thought I'd hear that from, I know I wouldn't expect to hear that out of your previous management team.
Right.
Yeah, and we believe it. It's not just our words, it's our actions, right? I mean, Romeo, for example, was sitting on a beach in the Philippines living fat, dumb, and happy, right? And I called him and brought him back. So we're serious about this. I would be very disappointed if we're not where we're telling you we're going to be next year, and we're going to do everything to get there. I'll be extremely disappointed. So we're going to do everything. Look,
Romeo's been buying stock too, huh?
Yeah, Romeo,
stock.
the heroic stock buying.
Yeah, you can't. They
program.
can't tax that like regular ordinary income. So I'll buy stock as often as I can. The window closes tomorrow.
Romeo, correct me if I'm wrong. I remember when you were at the company in your prior tour of duty, and I don't remember you buying. I maybe it's my old man brain. I'm misremembering, but I don't remember you buying much of any stock.
No, because I wasn't like I told you. Patrick and I are in control now, so we control the purse. And back then, I was just your typical VP of finance at the highest, and wasn't really, was just really didn't have much control of what we were doing, which was to grow the business so we can sell the company, which was basically buying revenue to get the revenue multiples. Well, right now, it was basically just survival, and Patrick and I knew that we can, right size this company, and being a SEC company, we're pissing away $2-3 million a year easily. So if we can cut costs. I mean, that won't go away because we're public. So we got to find, you know, ways of cutting other costs, which we have and we continue to do.
Yeah.
Um,
Yeah, we recognize that we needed to right size the company for the revenue, and that's what we were focused on, proving that we could be good stewards of money. I believe we've done that. Like I said, we've done everything we said we were going to do. There's no reason to believe we won't in 26. We got a good team. Will we hit some bumps? Maybe, but I promise you, if we do, we'll recover, and that's what we're going to do. So we're
you think-
excited. Uh-huh.
Do you think we could get you to come back in 6 months and do this again, or maybe next year do this again?
Absolutely. I'd love to. This helps us too. So I'm always interested in what you guys are thinking because I sit on this side. And that's why this call is just as important for me as it is for you today. I want to know where
Well,
can we
yeah.
be better and what I want to understand your thought process so we can understand, what can we do to improve the company from our side,
Yeah.
from the
One
inside.
thing I would just mention, maybe we can close with this, and
Mhm.
I don't know what limitations you have, but just it can be frustrating with small cap stocks. You guys are at the end of the line when it comes to releasing your results from year end, the audited
Mhm.
results. So,
Mhm.
if you're able to put out any sort of results
Mhm.
before they're
Earlier.
audited,
Yeah.
and kind of let the market know how good fourth quarter was, and especially as it relates to not having the cash burn, and that would be
Yeah.
extremely, I think, helpful for the stock price.
That's a
And
very good idea.
Yeah.
Yeah,
Given
what we'll do. Yeah, I
given
think
year
we're.
ends not till March 27th. So obviously Patrick and I are already thinking about those things.
Yeah, so we have to put out some numbers before JP Morgan in January, early January, before we do that conference.
that's good.
So we'll put out something then. I don't know. I'm not ready to commit, definitely revenue, and we'll look at what else we put out, but you'll have some numbers by then.
That sounds good.
Thanks, guys. I appreciate your
Thank you for your
time.
time
All right,
Have a
again.
thank
Merry
you,
Yeah,
guys.
Christmas.
thank you
Happy
guys
New
and
Year
have a
to you
Merry
guys.
Christmas and a Happy New
too.
Year.
Look forward to
All right.
You too.
2026.
Appreciate your work.
Take care.
All right.
Thank
Thank you.
Bye.
Take care. Bye-bye.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers and not Breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor, and no one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.